All right. Well, good evening. I am Bill Brown, the Director of New Faith Expressions for the Baltimore-Washington Conference. And if you're a little confused because I said welcome to Training Tuesday, don't be. It is Thursday. I haven't forgotten, but today is Training Tuesday on a Thursday because of the quick changes that have been released on the Paycheck Protection Program. Our Finance and Administration Department decided to pivot quickly, and we were able to accommodate that so we could get you the latest information to enable you to apply as soon as everything opens up. But to begin with, if you would bow your heads with me for a word of prayer. Holy and gracious God, we give you thanks as we gather together tonight for all of the possibilities to help keep our ministries moving forward. We thank you for the giftedness and the skill, the wisdom and the insight of both Paul and Pierre as they guide us this evening through some complicated applications as we try to help resource local churches through the Paycheck Protection Program. So guide us tonight as we bring all of this before you in the name of Jesus. Amen. So as always, just a couple of business items. Tonight's broadcast is being recorded and it will be made available with the slide deck, hopefully by tomorrow, if not tomorrow by Tuesday morning. So just to let you know, if you missed something, you can go back and watch the video later on. Also, if you have a question, please refer to the Q&A button on the bottom of your screen, and we'll get to the questions throughout the evening. But of all of our presenters, I found out this week that Paul gets a special award for being our most frequent presenter. He's got the best agent of all of our presenters. So he is our most frequent presenter, and he is also the one who likes to use the poll questions the most.
Oh,
so we're going to get started with some questions just to get to know who we have in our audience tonight. We have about 179 of you on the call tonight, which is wonderful. So for those who are participating via a computer, tablet, or phone, you'll be able to see the polls. For those who are participating by phone, you can look at the video later and you'll see the poll. So let's go with our first poll question to figure out what districts are represented. So that poll is now live. You can answer which of the districts you are from. And people are voting quickly. Not that this is a competition, but district superintendents do like to know how well their district is represented. And I do see the person who has a question that is in our Q&A, and I'm getting that information for you as we speak. All right, we're going to close this poll out. It looks like 89% of you have already voted. And here are our results, hopefully. Do you see those results, Paul?
We do.
All righty, it looks like the Greater Washington District is our best represented district tonight with 31 participants, or 19% of the participants tonight. But it looks like every single district has some representation, so that is wonderful. We are glad you're here this evening. We also want to get an idea of our breakdown between clergy and laity tonight. So here is our second poll, and just let us know if you are a clergy person or a lay person.
Bill, you added that third category.
I did add that third category because just in case somebody might not know. And we'll give that, oh, people have voted quickly. We're going to end that poll and we're going to show those results. And it looks like overwhelmingly we have lay people who are in attendance tonight. So that is wonderful. For my clergy colleagues, welcome. For those who don't know, we can talk later and help you figure out if you're a clergy person or a lay person, but we did not want you to feel left out. And let's see, did you want to do all of the questions, Paul?
I'm not sure, Bill. What,
Well,
what was the next one that we had?
This next one is whether and what your church is preparing to do. We'll make this the last one. Then
Why don't
we'll
we do that? And maybe
we'll
we'll come
trivia
in with the
contest
end.
later.
Yep.
Okay, is your church preparing to apply for your first draw of a PPP loan, meaning you have not applied before? If this is your second draw, or if you're just not sure and that's why you're here tonight. Okay, wow, we've got 92% participation, and let's end this poll. And it looks like tonight, Paul, that overwhelmingly people are applying for their second draw of the PPP loan.
Okay.
So that is wonderful. Without further ado, I'm going to turn it over to you and Pierre and take it away. I'll monitor some questions for you.
Well, thank you, Bill, for getting us all set. We appreciate you doing double duty this week, Bill. You did this on Tuesday night this week already. And Pierre and I are really appreciate everybody changing their schedules. We did not think that we would be needing to do this presentation this week. It has been a challenge to pull some of the information together. However, I believe that we have some very good information to say tonight. So it is appropriate that we believe that we've seen enough information to be able to make some very good conclusions of where we're headed. But when we got our BB&T link on Tuesday night this week, I started to think that churches might be getting, and that link was to reserve your spot to make an application. So when I was given that link to reserve a spot with BB&T, I thought that maybe this weekend they might be asking people to apply. And when I studied and when Pierre saw some of these advancements on the second draw, we think that it could actually go that quickly. So that's why we're doing this Thursday night. And it also gives us all next week for having good conversations with churches as they digest what we have tonight. So I appreciate everybody being here. There's a very good group, and I know we're going to be taping and we'll be able to get this to a large swath of folks who will be working in this area. The agenda for tonight, Bill, we didn't really talk through how we're going to do questions, but I think we have some material that I want to get through. And then I saw some of the questions coming in very early, and I know that we're going to tackle a lot of these questions with the slide deck. So I'm going to try to progress pretty well through the slides. And we don't have, it's not like we have an hour's worth of slides tonight. So I might ask for the due diligence of the group here to allow us to make some progress on the deck, and then we'll come and answer some questions. But tonight's agenda, just to put you at ease a little bit, this is what we're going to talk about, the Economic Aid Act. We're talking about which reopens the Paycheck Protection Program, which is now kind of being referred to as PPP1, and it establishes a new second draw program, which a lot of folks are referring to as PPP2. So we'll use that same vernacular for calling these PPP1 and PPP2. We're going to compare the application processes and the processes on which you're spending and getting forgiveness. There are some new concepts that we need to go through in detail. These do not come through clearly with the first glance at some of the literature. And I think what we've dug out for gross receipts and the 25% decline requirement are going to be of value for churches tonight. And we have three most common questions that I think we'll be addressing clearly. Can we change lenders from PPP1 to PPP2? Can we change our payroll cost calculations going into PPP2? And can our preschools apply for PPP2 by themselves? These are some of the common questions. Pierre's already been fielding some of these on our 15-minute consultation calls this week. So I think we're in a good stead. We've heard a lot of questions. We've done a lot of digging. We do have good information here for those who are here for the first time on PPP1. I'll try to use the terminology to allow those who have not been part of the PPP process to kind of pick up the vernacular, understand the process, and I will try not to make that so slow that those who have done the process get bored. But just know, I think we want to make sure we bring the PPP ones along with us tonight. I'm going to ask you to take some screenshots. So if you have your cameras, this is a very good link. And I'm going to recommend that the SBA has done some really valuable work this round. And I know we used the conference website a lot for the first round of PPP, but I am convinced that there's going to be some good tools out here on the SBA. So take a picture of that. Know that it's well organized. Down at the bottom, you can kind of see the screenshot. Has an area for first draw PPP loans, second draw PPP loans, PPP loan forgiveness. These are all the major buckets that you want to be able to identify. You click on the learn more and it exposes a lot more information under each one. We're also going to continue this round of PPP to do our consults. So this is another good one to take a picture of. This is a 15-minute consult with Pierre and myself, and we ask you to give us 3 questions before we go into each one of those seminars. Usually leads to some exchange of some emails. That can be one-on-one. A finance committee can also have one person sign up and then share the link so the entire committee can join with us. So very valuable tool. A lot of people took good advantage of that during the first round of PPP. So let's talk about the details. I've got a couple slides and then we'll kick it over to Pierre. The Paycheck Protection Program, when you start reading of some of these details, there really are 3 independent programs. And this is a very fast-paced program. It became effective on Monday this week, January 11th, and they think they're going to be done by the end of March. And so when I see consultants who are normally giving us a lot of good direction at this point, not weighing in, it causes me a little bit of concern because I think the SBA is much more prepared for this round of PPP. And I think the process is actually going to be simpler for PPP2. So I think they're going to take off like a wildfire. And I believe I've already had news reports in the Frederick News Post this week. One of the first small businesses to get a through a community bank were on the front page on Tuesday, said that they got their PPP2 loan through a community bank. So are those kind of indications that I think that we're in for a very short spell. Now there could be additional funds given, could be extensions on this. But let's think about what these 3 programs are. It's going to be the first draw loans. These are for any church that did not participate in PPP1. You'll be first accept applications from community lenders. Like I said, that started on Monday, community lenders, and they just say that in the future, the larger banks will also receive money. And many of the large lenders have interpreted that to be by the end of January, they think they're going to be able to offer loans as well. I share with you that I got my BB&T link to make that's kind of the queue, that's my invitation to put my name into the queue. And then eventually they'll open it up for applications and they'll send me an email and they'll invite me to go to the website. They'll give me my special logon ID. And that is how I am introduced to the application process within PPP. It is interesting that the SBA has a nice website where they are linking lenders with those who are looking for loans. So this is for community lenders, the small lenders, the ones that they funded initially, are out there, and you can put your profile in and they will match you up with a community lender. So if you may not have funding yet coming from your primary bank, this is the bank that you do your banking with, you might consider doing one with a community lender. I can tell you from the first round of PPP, a lot of churches had very good success working with smaller lenders, and many of the smaller lenders actually were receiving their applications by paper, and they were actually talking to the churches. And we found that to be of great value. If you're in with one of the major banks, that is an online application process. And I did not speak to a single person the entire time about the PPP1. Once again, these first loans are done through March 31st. Now, there's a program that's kind of in the middle here. So they're giving everybody a chance, if you participated in PPP1, that you could revise your first draw. And essentially, they say that you might want to revise your draw because you might want to increase the amount that you received in your PPP1. And we did have some instances here where some churches might do some consideration here. If you were a church that received your PPP funding through the first round and then returned it prior to spending any of it, there were some discernment that went on with the church. There were some announcements that were made for me, it was probably more vendor content announcements, not from the SBA necessarily. Some vendors got into this and said that the churches should not be applying for PPP. So some churches, not that many in our conference, but some churches I know gave back their money. This gives them the chance to go back to start and reconsider a first draw. So there is a process for that. There is also some churches where they were so early in the PPP application process that the bank did not know what to do with clergy housing allowance. And so if you're a church that got funded through the first round of PPP on just clergy cash salary, you might consider doing a PPP enhancement on PPP1 in order to allow you to claim the full, what you believe now with a housing allowance and with benefits, the full average monthly payroll cost, and that might qualify you for a little bit additional in PPP1. There is a little bit of drawback by doing that. You cannot get to PPP2 until you've spent all of PPP1. So you have to take that into account, that any kind of a revision of your PPP1 could delay your ability to apply for PPP2. So a little bit of balancing act there. Now, second draw loans. This may not apply to all of us because there's a criteria that's involved with PPP2 that requires, it's the first bullet here, requires that you be able to document at least a 25% decline in gross receipts in any one quarter. So we're talking about one quarter of 2020 compared to that same quarter in 2019. So for many of us, it's going to be that second quarter of 2020 was a decline. When the COVID first hit, many people will be able to say the second quarter of 2019 or 2020 was more than 25% less than the second quarter of 2019. That's kind of the conversation you're going to have with yourselves. It could be that the third quarter is the quarter in which you saw some decline compared to 2019. So you're looking at 2020's quarters. You have 4 quarters to choose from. You're comparing it to the equivalent quarter, the same quarter of 2019, and you're seeing if you meet this 25% decline. And the PPP1 forgiveness, I've already said this once, but we'll reiterate this. The PPP1 forgiveness is not required before you apply for PPP2. There's a lot of churches who are still waiting for their final forgiveness from the SBA or from their lender as well for PPP1. That does not curtail you from being able to apply for PPP2. All you have to be able to certify on PPP2 is what's written down below here. It says you will have used the full loan amount of your PPP1 before the PPP2 is dispersed. So you you can promise that you will have spent it before it's dispersed. That means you could apply while you're still spending it. But most churches have already spent it. They're just in the waiting for the SBA to complete their forgiveness process. This is a slide that allows us to bring both the SBA PPP1s and the PPP2s together, and it highlights some of the enhancements that are being incorporated because this application process is the same for both groups. And there are some changes. So we're going to go through the language a little bit, and it's going to be rehashed for those who have already been through it, but we'll focus on some of the enhancements, and that's how you won't get bored. But the amount of the PPP applications is going to be the same. It's going to be 2.5 times the average monthly payroll costs. And the enhancement is, it used to be paid on the 2019 when we first did this in PPP1. Both groups, PPP1 and PPP2, get to do this now on either 2019 or 2020. So you can calculate your average monthly payroll costs for 2020, compare them to 2019, and you can go to the higher number if that's what you'd like to do. Not forced to. In fact, staying with your 2019, if you're doing PPP2, might be an enhancement because it's already been approved, it may have already been forgiven, and it might just be less confusion to the lender if you just accept the 2019 as your marker and allow it to flow from there. For those who are new to PPP, we're going to tell you what the payroll costs are. They include the cash salary, the housing allowance, and the employer paid benefits. And there was confusion about this early on. The housing allowance, the cash salary, and the employer paid benefits. And for churches, this becomes a bit of an issue because that doesn't all show up on the W-2. So lenders, conversations with churches about W-2s, maybe not seeing the housing allowance. These are all factors that you have to be prepared for when you're dealing with the bank about what is appropriate for a payroll cost. Now, the thing that confused us in the first round was whether or not a contractor, a 1099 paid employee, was to be included in your payroll costs. That's very clear now through the first round. It became very clear that the SBA is preferring that those contractors apply by themselves. So I had experience doing that. We had somebody in the conference that was getting a W-2 from a church, and they also had a 1099 for another commitment of responsibility that they had. And so it was through the Virginia United Methodist Credit Union that I found how to help that. No, not everybody's understanding the clergy situation. So I felt very comfortable that the credit union down in Virginia, they named themselves the United Methodist Credit Union, and I'll point to them a little bit later in the presentation. But I was very, very pleased that they were able to take in that clergy and talk them through the process. They knew exactly what questions to ask. And within a day, that person had made their application for the PPP loan. And then they worked it out with the church that had paid them the 1099 so that the compensation actually went to the church for keeping their compensation going. So we have some good options there. We learned in the first round that the qualifying expenses, most churches didn't have to use it because they were able to go 100% salary. So it was nice to know that you could use these amounts that come in from PPP for payroll costs, for utilities, payment of mortgages and rents. But many of us just allowed us to wait and spend it on payroll, and then claimed at forgiveness all the funds were used for payroll. And it may not have been exactly 8 weeks in which that occurred, but it's definitely within the 24-week period that they gave you, you could spend it all on salary. Just know that they have enhanced this now to include 4 more areas that you can use for qualifying expenses. They do match well with some of the things that we did in the churches during COVID. Operations, things like online giving, anything that we've done for equipment on streaming, I think could be qualified expenses. property. This is getting at some of the damage that was done to buildings during the public disturbances. I don't think we have any of that necessarily, but there might be some reason to claim some of those. Suppliers, this was mainly restaurants. They're trying to get the stocks. If you need to stock a kitchen, things like that, we might do this with the camps. They'll base it on an order that's placed before the loan, and they'll allow you to count that as being part of your, eventually it's going to be delivered and you'll pay it when the application or when the funds are actually distributed. And they've included protective equipment, anything that's been done to do plexiglass, PPP, any of the masking, those types of things are all called equitable costs now that can be used with the PPP funds. What is important about that is you must pay the PPP against qualifying expenses in order to get forgiveness. So if you don't spend it, and there's a requirement that the expenditure be at least 60% towards the payroll costs. So if you don't spend it on these categories, then you don't get forgiveness for the 100% of what the PPP loan was for. They are giving us 8 to 24 weeks. That's for both PPP1 and PPP2. And I will dwell into this authorization. Churches kind of leapt into PPP1 with all different game plans, and let Pierre and me just put something on the table and see how this fits for your church. But we wanted to make sure that we knew that we were not causing this to be a loan that would normally need a charge conference for approval. So that statement we had made during PPP1, that this is going to be a grant application, and with the grant application, we are recommending that a church council do the vote. The other thing that we saw a little bit confusing in PPP1 was that we would prefer that the church council also identify who's the one person who's going to apply for the loan through the online application for the church. When we started this last year, we thought maybe you'd have 2 trustees sign this, and then 2 trustees weren't getting on the computer together, and one person ended up being the person to do it all online. I'd prefer that church councils just simply identify who are they authorizing, because that one person who is entering in all the church data needs to also know that there's some type of a resolution behind them that gives them the authority to do that, and that the church is behind them on that. I talked to a lot of nervous people who were entering data and said, boy, I really feel like I'm taking on a responsibility that I've not really been enabled to see all of the details of what I'm doing. So just know that will address that nervousness. Now let's talk about the certification, because the certification between these 2 processes are about equal. For PPP1 and PPP2, this is the wording, and I want you to make sure that you see the wording, because this becomes part of the conversation around the finance committee table and the church council table to understand whether or not you are actually in harm's way, I guess is one way to say it. Are you in harm's way and in need of the PPP funds? And so this certification is important on how it's worded. They say, based on the current economic uncertainty, it makes this loan request necessary to support the ongoing operations of the applicant. For many of us, as we looked at this and certified that in our own minds and then talked to the leadership groups around us, it is the economic uncertainty in which we have no clue what it's going to look like 6 months from now. And you take parts of what is real now. We've got the ability to see in hindsight some of the reality. I'm sure that's why some of the PPP1s are on the call tonight, because they saw the reality and now they realize the PPP1 might be something for them. For us at the conference level, I will say this. We qualified for $1.2 million at the conference level for PPP1. We looked at this uncertainty because we had reserves. We had 10% reserves, 15% reserves actually, but it's good to know that the CFA had reserves, 15% reserves is how we were thinking about that. And that adds up to about 1.7 to $2 million of reserves. And we could have easily said that we could weather that storm, but in the midst of the uncertainty, what actually happened to us in 2020 is that the mission shares ended up 1.7 million short of budget. And so for us, the magnitude of the PPP grant is what in fact got us through the storm of 2020. And I believe, we haven't had conversations yet with the CFA, but we believe that it is prudent for us to also consider that there will be storms in 2021 until everything gets on straight. So I actually, in my mind, think of the magnitude of the financial downturns could be even greater in 2021 before everything gets started back up. It's nice to know that we're on an uptrend, but it could get worse than last year. If it's still the same, it's still significant. So I encourage your churches to have that conversation. Pierre and I are certainly able to weigh in and help. I've done that on a couple of occasions with finance groups who really wanted to talk that through. And then they went off and talked about it themselves to discern what's best for them. PPP2 also has this certification about the 25% decline. Now, Pierre, I just end up with 2 slideshows here on the process, so I'll be turning it to you in short order.
I'm going to interrupt you for a quick, okay, you might get to this. So there's a number of questions that come in that I'd like to get to before we switch over to Pierre. So I think
so we might be able to use these 2 process flows, Bill.
I think you will. Carry on.
PPP1, 3-step process is how we taught it during PPP1. So for those who are new, there's a period of time before the loan is originated, and we call that the application process. In that application process, the highlight is you need to calculate the average monthly payroll costs. You're either going to be doing that for 2019 or for 2020. Once that is identified, it's an automatic calculation. It's 2.5 times that, and that's the amount of the loan that the lender will give you. And you need to submit that application by March 31st. That's really all that's entailed in the application process. When you get to the covered period, we call this middle period where you're spending those funds, the covered period, it is flexible. It can be as short as 8 weeks, as long as 24 weeks. And during that time, you're doing a couple things. The first one is you want to spend the full amount that you were given for the loan within that 24 weeks. If you do that, that's one criteria for being qualified for full forgiveness. You need to keep all of your receipts for those expenditures. So for payroll records, for supplies, vendor receipts. If you keep all the receipts, that also helps you get full forgiveness at the end of the spend. And then the third one is you must only claim qualified expenditures. So as long as you keep it in, I think it's about 8 categories now, then you also qualify for full forgiveness. And many churches found that they could keep it all in payroll and make that short order. That's phase 2. Phase 3 then is the forgiveness process. We talked about one of those criteria already. Payroll costs have to be greater than 60% of your overall spend. As far as when you look inside of your payroll, you cannot reduce the salaries or wages of individual employees by greater than 25% to qualify for 100% forgiveness. You can reduce hours, but you can't reduce their wages by more than 25%. And there is a simplified forgiveness process that was given to those who went through the process on PPP1. If it's less than 150,000, it was actually, I've done one that was less than 150,000. It was very short ordered. The documents were minimal, and it's sign and off it went. For the conferences forgiveness process at the higher amounts, there were some significant number of forms that we had to attach to the forgiveness process. But once again, I was pretty pleased that within a month, 6 weeks maybe, everybody had done their review. When you look at the green at the loan or origination date and over to the right, it's the same process between PPP1 and PPP2. So everything in step 2 and step 3 are the same. So when I flip the slide to now slide PPP2, now you'll pick up what is different about the application. Once again, this is kind of recap. We need to calculate what is your gross receipts decline by quarter. And you need to, we also, on our email that we sent out to invite everybody to this seminar, we said we'd like you to do that for just the preschool as well. So do that for your preschool only if it's applicable, and then do that for your overall operation with the church and preschool together. And then see if you want to make any changes to your average monthly costs. The monthly payroll costs that were used in PPP1, you do get a chance to change that perhaps in PPP2. I think you also get a chance to change your lender. Bill, let me look at the clock and see how we're doing. And do you want to hit us with a couple questions at this point?
I do, just because before we get too far in, why don't you drop the screen share for a second so we can see your face as we answer. Oh, wonderful. You mentioned about it being an invitation only, that the conference received an invitation link, and several people have asked, what does that mean, invitation only? And if you did get the PPP1, will you get a link?
Well, I was kind of surprised that when I went through PPP1 the first time, I had to go out to the website for BB&T, and I found the link that was public to everyone, and I clicked on that, and that's how I registered to get in line. I've been looking at the BB&T website continuously, looking for a similar type of process where I didn't want to miss the link. And I ended up getting an email from BB&T this time. So it is very possible that lenders are going to take a tact that they know who they catered to the first round, and by invitation, that sounds to me like what I experienced. They sent me the email with the link for me to put in my registration. Yes, I'm interested in a PPP2, and call me back when I can apply.
Okay. I've got a question that's going to be in 25 different parts. Now, we have a lot of questions about gross receipts. So let's start simply.
This is for Pierre.
Oh, this one's for Pierre. Is she going to get to gross receipts?
Yeah, actually, Pierre's going to be able to explain what gross receipts are.
Then I will hold off on that question.
That's where we're going next, right, Pierre?
Someone asked if their church received a PPP1 grant in May based upon first quarter income that was down by 45%, but no other quarter meets the criteria of the 25% decline. Can they apply for PPP2 based on the same first quarter income that they use for PPP1?
Let me, so I might need to parse through some of those details, but I think I heard the conclusion that the PPP funding was considered part of your gross receipts. That's the first thing that we've learned, is you need to take the PPP funding out of your gross receipts. And do the comparison that way. Does that change that question, Bill, if I take out the PPP receipt?
They didn't mention the PPP1 receipts at all. They just mentioned that their income was down by 45% when they first applied. They got the grant, but their income has not been down by the requisite 25% since then. So
it actually is a quarter to quarter comparison. Doesn't have to get any harder, and it doesn't matter what the PPP loan timing was in the midst of that, because you're going to take that out. So do it without the PPP, and strict quarters, April to June, is probably the most likely that we're going to see.
And you mentioned the forgiveness of loans of 100,000 or greater. Is there a threshold lower than 100,000 where they don't need to apply for forgiveness?
No, there's no process where you don't supply anything. They need you to sign off on the loan to get it turned into a grant. So they need your signature in that phase. When I did one of the small applications, it was at that time less than 50,000. this new 150 threshold didn't come out until this last round, and that's why a lot of banks held off on forgiving any other churches. That's why everybody kind of got stuck if you're in between 50 and 150 especially.
Okay, now as you know, in our annual conference, we have a lot of multiple point charges. So a couple of questions on that. We have one person who they applied as a 2-point charge for PPP1. Does that scenario also apply for PPP2, that they can apply as a charge?
Yes. So we have some new information that might help in that argument as well, but I say yes to that first.
Okay, now what if, let's make this even more complicated. What if in the charge one had the 25% decline, but the other did not?
I think the application is going to have to be an all-in on whatever you're calling the all-in. So the question is going to be, can you separate those two out? And yeah,
okay.
If you can't meet it all in total, then you don't qualify.
Making sure I got through all the charges. We'll get through some of this. How do you define income? Is it just collections? Is it fundraisers? Is it the PPP?
If that's a perfect lead in to peer.
Okay, let's go to Pierre, and then I'll go through some more of these questions.
Okay.
Take it away, Pierre.
Okay. The PPP application is intended to be simple. The application itself looks a little different, only at the top where it says second draw borrow application form. So you're going to fill out the information at the top, including name, the address, but you're also going to fill out this number, this code, which is called the North American Industry Classification System Code. And normally you're going to use these two codes, one for religious organization and the other, if you need to, for preschools and infant daycare. And because this application is only used for those who apply for and were granted the PPP1 application, you're also going to need to indicate the PPP first draw SBA loan number, which you see almost at the bottom. So there's two codes that you're going to need. And again, this is only used for those who had applied for and received PPP1 funding. So the question then becomes, well, what's the difference between this PPP1 application and the PPP2? And one thing they're asking for in this process is gross receipts. That was not something that was asked for before. However, it is a criteria in being eligible for this loan. So the question is, I think it was mentioned before, what is gross receipts? Well, gross receipts is the total income or revenue that you received, whatever it is, whether it is donations, whether it is fundraising, whatever it is. And those gross receipts are those that are defined by the IRS code 6033, paragraph 6033. And normally, if an entity were to fill out a 990, they would include this in item number G. But because churches are not required to fill this out, then we're still using that information or what would be normally required on that. So there are a couple ways you can do it. You can go ahead and fill out the 990 form to gather the information. But if you have a profit and loss statement, if you're using an accounting system, if you're using spreadsheets, whatever you're using, then you still have to define gross receipts as the IRS does. And so gross receipts are things like all donation, grants, and bequests, all fundraising, all program service revenues, including preschool registration, building fees, event fees, interest and investment returns, and gross receipts from rents and sale of property. The major thing is you do not subtract any expenses. It is what you've actually received, but it does not include cash draws from reserves or refinancing. What that is saying is that you receive the money at one point. If you're changing it from one type of fund to another, for example, changing from capital to operating, that's the same money. So you're not going to include that. You're not going to include pass-through things. For example, if someone gave you a check to give someone else money, that's a pass-through, or it's an event fee like rock. So parishioner gives money for rock, and then you send that to the conference center. That's not included. And importantly, the PPP funds received in 2020 are not to be included in these gross receipts. So these are items that are to be received, are included in gross receipts, and it goes according to the guidelines of the IRS.
Very good. So I've been on some calls and webinars, as you can imagine, the last couple of days and last week. And some of these, some groups try to parse this a little bit, and they try to say, well, if it's restricted, then it's really not a gross receipt. And just know that this is not the way that the 990s are looking at that. The 990 says you count it whether it's restricted or unrestricted. I used to do this with Rebuilding Together for in-kind. That goes on a 990. So you need to convert anything that was an in-kind donation to the church. You convert that into the fair market value. That is also part of your gross receipts. It doesn't matter what program they're giving to. If it's money that's going to the building fund, a capital campaign, cemetery fund, just know that it's all in gross receipts. Gross receipts. The only one that you're getting to take off. The other little twist that comes up with this is a donation that might be given to the church for another charity. Just know that that is a revenue to the church and a ministry expense to the church when it's paid out. The payment, pass-through payments are definitely those things that a family is given to the church just because the church is going to collect them all and then give it to somebody like Rock all at one time. So it's as simple as the family giving it directly to Rock. Okay, so those are the two. Bill, I have 3 slides and then we're done with this section. So maybe we can go straight. The biggest thing that we have now is Piers talked about the gross receipts. Now we're going to talk about the 25% decline. 25% decline is only part of your criteria for PPP2. It requires that you be able to document at least one quarter in 2020 that had at least a 25% decline in gross receipts compared to the same quarter. The block that is shown here is what's on paper for the paper application, and I'm sure for online applications, it might look similarly, but what you're being asked to do is you're going to be asked to give a reference quarter, one of the quarters in 2019, and the nomenclature is 2Q 2019. What was the gross receipts is what they're going to ask you. You'll have to document that. You have to find how you document it. And then you're going to compare that to the 2020. You're going to know that this, I gave you an example here where they meet the 25% criteria. Know that they also give you the ability, because some people will just do this more easily by looking at their year end. So there is an ability to do a year-end comparison. And in those cases, the reference quarter will just be called annual. It will be assumed that it's 2019 annual. In this case, it was 400,000 gross receipts for the entire year. You're going to put annual in the 2020, and you'll be able to show a 25%. If you don't have 25% in either one of these blocks, then you don't qualify for doing the PPP2. That's how you get ruled out. And this year, this annual that they give you, there's some math behind it. They say, if you can meet 25% on the annual basis, we know at least one of your quarters was greater than 25% decline. So they're trying to do that to simplify it. Once again, all the push by the SBA is to make this simple for the PPP2 funding to be able to get pushed out as quickly as possible. But there is a concern that I have with this documentation, because some of us won't be required to give that documentation as part of our application and others will. So you need to understand this page to understand where you fit in that category. But the documentation for me is the key. Let me just go down to those bottom two bullets and say that if your loan is exceeding 150,000, you need to supply your documentation with your application so the bank won't get ahead of you. They will review it. They will protect you to make sure that you properly qualify for it, and you won't receive your money, your distribution, until they're satisfied with your documentation. The risk that we have here is if you're going to receive a loan, and this is the last bullet, if you're going to receive a loan that's less than 150,000, then they say we'll let you go forward now because we understand you're a smaller organization. You probably don't have all the system support that the larger entities might have. And therefore, we don't want you to struggle in getting your application in, and we'll ask you for your documentation when you seek forgiveness. And I don't want that to be a surprise when you get your application, you get your funding, and then when you go to the forgiveness process, they tell you that you didn't qualify with a 25% decline. So it's very important that this documentation be in place. And here's how I think the conversation is going to go with lenders. The first bullet's quite evident to me that the lenders are going to think that you're going to have a Form 990 in your hip pocket that you can download to them and give it to them. And so there's going to be some conversation where you need to teach the lender that the churches are exempt from filing 990s. Okay, so no 990s by a church. And the closest thing we can come is a profit and loss statement. Profit and loss has both your income and your expenses down below. You can pull that for periods of time. So if you pulled it from April 1st through the end of June, that would give you your second quarter. You do that for 2019, you do that for 2020, and you do the comparison of those two quarters and see if you can fill out this table down here at the bottom of the slide and show that you've got a 25% decline. That's kind of how you can see it happening if you have a good system support. But I do know there's going to be a lot of churches that are sitting there and they're going to have to just come up with the calculation of the gross receipts, and it's going to end up being something more of a handwritten report. Just know, I think you can do that. If you're going to end up with a handwritten report, I'd like you to go towards making it look like a Form 990. Mm-hmm. So I've given you the links here on this page. Might be one good one to take a picture of. What they do for a 990 is they have a schedule that's called a Part 8. It's called the Statement of Revenue. What you see on this right-hand side is a column that's tallying up all the different types of revenue for the organization, and they call it total revenue. Total revenue down at the very bottom. The unfortunate thing is that page 1 of the Form 990 is called gross receipts. And there's absolutely no reference to a gross receipts on a schedule. There's no schedule that says that you add this, 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 and this to and you get gross receipts at the bottom. What they end up doing is they give you a verbal narrative inside the 990 instructions on how to calculate gross receipts. If you find yourself in this category, Pierre and I would like to work very closely with you to be able to calculate what you're going to be providing to your bank. So if you can run a P&L, try that first. But if you need to go into this kind of line of thought with a bank, get us involved so that we can help guide you through it. Bill, we have 3 questions at the end. Do you want to see if any of our 3 questions match up to the questions that are at hand?
Go ahead and ask and answer your 3 questions.
Pierre, how did we say we were going to do this?
Can I change lenders?
And you're
That's
asking
the first
me
question.
that question. I'm going to answer it.
Yes.
And then we're going to do the opposite on the next
Yes.
slide.
So
Okay.
can I change lenders?
So this is our audience. Well, it's not audience participation, but can I change lenders? So yes, the answer is you can clearly change lenders. But you have to realize that your first lender knows you and knows your documents that you submitted during PPP1. So there's a lot of value in just allowing that invite. It sounds that the lender will send you an invite and you'll be invited to go in. You're going to tell them your SBA number from the prior loan. They'll have all of your other documents in hand. So there's a lot of reasons not to change. But why might you change? You might want to change because that lender didn't count your housing allowance or health benefits the first time. So that could be part of the reason you do it. I know that there were a lot of customer service issues, a lot of delay on the online. A lot of folks felt like they were being unfairly treated through the first process. That could be another reason why you change. But in some ways, it should be rather simple. You've already applied PPP1 documents to a lender. You've got those on file. They can be the same documents if you use the 2019 basis for the payroll costs. They can be the same documents that get sent to the lender this time. You just find another lender. And it could be that the only disadvantage could be that if you go to a new lender, that they might prioritize their work with their current customers who are part of their, who have an account with them, or somebody who got a PPP1 loan with them the first time. So that's why I gave you two lenders here on this slide. Pierre and I felt these folks really fell in favor with us through PPP1 because they helped people at the very end of PPP when all the other banks had closed up and said they weren't receiving any more applications. We got quite a few churches through. This is the one down in Virginia, the conference. They call themselves the United Methodist Credit Union. Just for full disclosure, they're able to, they are organized as a credit union a little bit different than Market USA, who is our legacy Methodist credit union here in the BWC. So they're structured different, and Market USA is not able to provide the same personal loans to persons as the Virginia has constituted themselves. And so this is why they're able to do a PPP loan, and you should not feel bad. Their constitution was changed a couple years back to allow BWC churches to participate in their credit union. They do have a reservation system here. The link that you see here is the link that allows you to put your profile into their reservation for you to then be called when the application is ready for you to be applied, to go online and apply. This is the group also that did a independent contractor for us when we didn't think anybody else would help. So very good group. And West Banco was the other one. So I give you the link for West Banco. West Banco did a lot of hand holding, and they were actually people that you could talk to. And I'm sure others ask around. Other churches had good successes. Other churches had bad successes. So, so we've all have opinions. So be friendly with each other and share what you know, and we'll all find a good home for this PPP2. Now, Pierre, I have a question for you. Can we change the average payroll calculations for our PPP2 application?
And the answer is yes. Applicants for the PPP2 can use either the 2020 average monthly cost or the 2019, whichever is greater. And also you have to make sure that you include that the housing allowance and employer, not employee paid benefits in the calculation if it was not done the first time. And also make sure that independent contractors are not included in the church payroll costs, since they are being encouraged to apply directly to the lender. We had situations where churches actually included the miscellaneous 1099 in the application, and when they applied for forgiveness, they had a problem. Also, seasonal details. Applicants for PPP2 can elect to use the average monthly payroll costs for any 12-week period between February 15th, 2019 and February 15th, 2020.
And Bill, I think Pierre has a question for me, and this is going to end it.
So Paul, I want to know, can the preschool apply for this PPP2 by itself?
So Pierre, you know, this has been the hardest question for us to get the solid answer to. However, the source of the discussion that I bring to you tonight, I have one source. That one source is a company out of Texas. I can't remember the name. Vanderbloemen. Vanderbloemen taught during PPP1 all of their, they taught their churches that participated with them, and they deal with churches and church-run preschools and church schools. And they taught heavily the PPP affiliation waiver that is provided for religious organizations. And the way that this waiver was used in PPP1 was that you could have a church and a church-run school, and it could be a very significantly large church that has quite a lot of endowment and reserves. And so you had a financial body trying to make a decision that said, this school that operates under my EIN is the one that's having troubles because they're not meeting and they're not having any registration fees, but the church itself has more than enough reserves, and we would hate to put in an application because we think our reserves are how we're going to weather this storm. And it was through that conversation that they felt that they could not as a whole enter into the PPP1 loans. And they used this waiver, and the waiver says, it's provided first of all by the SBA, and it's provided, this excerpt that I have on the right is from a faith-based organization's FAQ. And they actually gave the addendum that that these types of organizations used in PPP1. And the key words on here that talk about it is the relationship of a faith-based organization to another organization is not considered an affiliation with the other organization if the relationship is based on a religious teaching or belief or otherwise constitutes a part of the exercise of religion. So why did they want that? They wanted that so that they could break apart the school from the congregation, from the church, call them two separate organizations, disaffiliated essentially. And normally the SBA would look at that and say, you're together, you're under the same EIN, and therefore you are affiliated, therefore you have to apply together for the loan. But they wanted just to apply for the school, so they used the waiver at that point to be able to break off the school, and the school is the only one who applied for the PPP loan. And the management and the leadership of the church and the preschool said, yes, that's the answer we wanted. Now, this Vanderbloemen.com is where we got this from. They counseled many churches for this through PPP1, so it's a little bit time tested. I want you to know that they were also in very good communications with the SBA in Houston when they made this determination. And I also believe that the SBA in Houston and perhaps even members of this company were also influential in working with Congress in order to get the faith-based organization waiver that is noted here. And so they actually had a webinar with Senator Tim Scott during the PPP1 in which they delved into this faith-based organization, this waiver of affiliation. And they were really thanking Senator Scott for his actions within the Senate to make sure that this waiver had been put into place. And now with that experience of what they did with PPP1, I think it now comes into play for PPP2. And I've heard Vanderbloemen talk about it in the context of PPP2, that we should not be encumbered by trying to separate off one unit which has experienced a 25% decline from that may not have. And so we enter this with a comment that says it appears to be yes on whether you can apply by a preschool only, a preschool that would clearly qualify for the 25% decline. But I will say that at the bottom, it is recommended to verify this position with a lender before you submit your application. I have made a call to the credit union, Virginia Credit Union, to understand what their position is. I do not have their answer yet. So I am looking and scouring as churches do this and talk with lenders. I think we'll work as a group to try to pull this together, but I do believe that this is an avenue that is worth exploring. And Bill, that takes us to our final questions.
Okay.
We're doing pretty well on time. We've got some good time to talk.
And we've got some good questions. So first, feel free to drop the slides for now, Paul.
Okay.
Just to remind everybody, these will be available on the conference website either tomorrow, but no later than Tuesday. Remembering it's a holiday weekend, so no later than Tuesday. And for our participants, I have placed all of the links that Paul referred to in the chat. So if you want to start looking at things, you can go to the chat and copy and paste all of those links into another document and begin to look at those over the weekend as you wait for the slides to be available. So a couple of questions. Someone was quite concerned that their lender may or may not send out an invite. Should people begin contacting their lenders now?
Well, there definitely is a need to contact your lender. Now, I'll put myself in my shoes. I didn't know anybody to call at BB&T, so it didn't mean anything to me to call my lender. What I kept doing was looking online to see if they told me anything by pushing information to me. So it was completely out of the blue that I heard from them. I anticipate you should not be too nervous at this point, but it really would be nice for somebody at a local office to tell you that they have not sent out those invitations. So do encourage folks to have that conversation. Try to peek in the box as much as you can.
And you mentioned a lot about changing lenders. What if you have a different person filling out the application on PPP2 than you did on PPP1?
Yeah, that won't be a problem. It's just a learning curve for the second person coming in. So the documents that you signed for PPP1 were independent and complete. When you got the forgiveness, that was a done transaction. PPP2 is a completely new set of transactions.
Okay, so for Pierre, we have a couple of income and gross receipt questions. Do you count other grants as gross receipts? Like if a church received the conference technology grant, or some churches received county assistance during the coronavirus, some receive some state assistance. Do those types of grants get included in gross receipts?
Normally, grants that are received are included in gross receipts. I think they're excluding the PPP because that would be redundant, but I am not sure. I'm pretty sure the government grants would be included. Paul?
Yeah, I heard this on one webinar here, and I heard them liken some of the relief grants to PPP, and they would fall in the same category of not being counted.
Okay.
They were strictly for relief. But I do think that the BWC grants are not necessarily that same category. So federal grants for a part of COVID, let's call that all part of the PPP for now, Bill.
And what the conference offered in terms of the pension and benefits relief, I know some churches were relieved from having to make those payments. Some churches that didn't qualify received an equivalent grant back. Would those churches who received that equivalent grant back have to count that as gross receipts?
I'm going to tell you to do it with it all in, and call me if that's the thing that throws it out.
Okay. I also included
want to look over your shoulder to help coach you through that. it
All right.
could be some rationale for trying to say that's a similar grant.
How about restricted donations?
Restricted, definitely. Anything that goes to a building fund, to a cemetery, that's an all-in, and it's counted as gross receipts.
Increase in value of investment accounts.
Peter?
Well,
I looked at this one really closely. It has to be a realized gain.
it has to be realized gain. No, it couldn't be unrealized. It would, and then again, the question would become, what type of basis are your books on? If they're on a cash basis, it may be a different answer if it's on an accrual basis.
Yeah, but the 990 goes through and it says it's regardless of your accounting standard, accrual or cash. If you received it in hand and you saw it in a bank account, investment account, anything like that, Bill, if it's cash in hand, not an unrealized gain, but a realized gain, it's counted.
So if a church has, let's say a church has an endowment fund that pays for the housing allowance, and they draw the interest off of that endowment to pay the housing allowance, is that interest counted as in the gross receipts for a year?
Doesn't have it. Go ahead, Pierre.
It would, because you would have recorded that. The
Okay.
interest would have been recorded, so it would be included in there.
But it doesn't have anything to do with the draw out to use
No.
it for paying the housing allowance.
No.
Right, that's just an internal transfer.
What about equitable compensation?
Letter of the law says you have to count it. I'm thinking it's so just so you understand my frame of reference, I'm going to the 990 and I'm reading the instructions on 990 on what each category means. So I think that counts.
So how about a church that received funds for preschool but had to refund them?
Well, refund, okay, so you came in and then we did that a little bit with the camps. We see that with camps. I actually have some negative periods with the camp when they returned their proceeds. So we see it in ours and we're counting it all. It came in one quarter and went out in another quarter. So you get a plus in one and a negative in the other.
I'm going to just say on behalf of everybody, thank you. They did not teach any of this in seminary, so thank you for your wisdom and knowledge. You mentioned about those employees who are 1099 and that they should be applying for their own relief loans. How does a church know when to start and stop paying them if they're receiving their own PPP relief?
So the one that I was involved with in PPP1, it required a lot of trust and coordination because the PPP was given to the pastor. The pastor had to be in full disclosure with the church what was happening so that the church knew when not to pay the pastor, right? And that's what you'll be doing with these individuals. If they're a 1099 out of your congregation, you just have to set this up so that you understand what they're applying for, and then that's their compensation instead of the church payment.
I am paying attention. Somebody needs some additional information, and hopefully I can copy and paste it for them. And yes, for those who are wondering, the links that are in the slide presentation will also be available when we make the slides available. I'm going to start now at the top. I think I've grouped them all together already, but here are some random ones. What if, does it matter if payroll costs? So for example, there was a pastoral change in July of 2020 and the pastoral compensation is less now than when PPP1 was applied for. Does that matter?
Here you got. So if you're on, you don't have to ever recalculate your 2019 filing number. So you get the option to throw 2020 in as a new number, but nobody forces you to do that. because that's the peer slide that says it's supposed to be as simple as just clicking on, I want to reapply with the same numbers I had last year. And
Okay.
off they go and they cut you a check.
Now, I know during the PPP1, I do pay attention, there was a lot of talk about if you receive the loan to a grant, you cannot terminate an employee. What happens if during the PPP2 timeframe, it's determined you need to terminate an employee because just under the circumstances, that position is not needed during COVID?
So there are some nuances with the forgiveness that require some calculations, and it's really an ad hoc. You have to look at each situation a little bit the same. So it does give you the ability to do some of these things, Bill, but essentially I think they've softened a little bit the workforce number, and they've held tight to you can't go lower than 25% on their wage. Or do you think same kind of pick up the same scenario? It's tied more to their salary and wage than the number of headcount.
Right, because situations change and organizations change structures. And so it's tied to, you don't pay a person less. It's not that the organization changed
Okay.
and that was not within your control, especially in the appointment system.
Now, for somebody who has not yet applied for PPP1 and is looking to do a first draw, do they still have to document the 25% decline?
Not at all.
No.
Oh, some good ones. Back to gross receipts for you, Pierre. If somebody makes an advance pledge payment in December, which the church escrows and then recognizes 1/12 of that amount each month, how does that get factored into gross receipts?
That's a tricky one. So they're obviously on some sort of, I'm just thinking that if it was received, then it's income and that's what was received, because the other part is probably put in another account, another fund. Paul, do you have the same sort of thought?
If you have access to it, then it was received.
Right.
If for any control mechanism, they did not have the ability to access it until it was the 1/12, then we might see that differently. But if you have access to it, it's when it first came in.
So that's just an accounting matter on their part.
And it kind of falls into that, I have a restriction on it,
Mhm.
and it's a time restriction rather than fund, the purpose of the funds. But it's still a restricted donation.
Now, in a multi-point charge, we did talk about both churches applying. What if one church wants to apply and one church doesn't?
So I would ask if they have two tax IDs. That's really simple to talk about two tax IDs as being separate. And that's the way we in BWC went through the entire first PPP. But now this disaffiliation waiver says they can easily separate. They did it together. You put that amendment, that addendum that the SBA gave us about the religious waiver for affiliation. And now you can explain to them why you're not applying together. And they really should have no discernment to say otherwise, because you're claiming that you fall under the waiver. When I first heard that, I must admit that I thought it was gaming the system. So I've had to sit with that for about 2 or 3 days, and I'm certainly open for conversation. I know there's a lot of folks on our call tonight who I want to have conversations with now that we've made it public. I told my treasurer counterparts in the other conferences that I was jumping off into the deep water tonight, and for some of them to throw me some flotation devices if I sink. So far I haven't heard anybody tell me I'm completely out to lunch.
And you're a good swimmer, Paul. So
I am a good swimmer.
you're a very good swimmer. And a lot of these questions, I'm going to remind our participants, a lot of these questions that I'm seeing are so very specific to your particular context in your particular church. It would do you the best to contact Paul and or Pierre through the consultation process. The link is in the chat. The link will also be in the slides that you can reach out and ask them specifically, because it's such a specific question. But here's one.
There's our emails too, Bill.
If everyone can see that, the emails for Paul, and it's just first initial, last name at bwcumc.org. Here's a good question. Is it possible if a church has not applied for anything, can they apply for both PPP1 and PPP2?
Yeah, so that's what they start talking through. So you need to do it all by the end of March. You need to spend it all before you can get the disbursement of your PPP2. So it's possible, but time is probably going to work against trying to do that. But there's nothing wrong with that thought. And who knows if March 31st is the true end date. That might get extended out. So you might actually be able to do that. And just know that you'll have no criteria on the first one, other than to say that you feel uneasy about the economic condition of the organization. That's your only certification in the first one. And then the second one, you'll know already whether or not you meet the 25% criteria decline.
Okay. Here is a new question. Does receiving the PPP funds require that the receiving church set up a new account with those funds, out of which payroll, expenses, utilities, and other appropriate expenses are paid until the funds are exhausted? Or may a church deposit the funds in their general fund or their current account, out of which the
What did we
expenses
do, Peter?
normally be paid?
We did not set up a separate fund.
Nothing requires you to do that. I saw some webinars where they were guiding you to do that. I've had some conference treasurers say that's the best practice, but that it's fund accounting, and it's fun accounting as well, but it's fund accounting, and that you don't have to set it up as a separate bank account.
And I think the rest of the questions that I'm seeing are very church specific and contextual. So I would suggest that if we did not get to your question, please reach out to Paul and Perry either through email or by scheduling a consultation. Again, thank you both for putting this together. Thank you for being flexible and calling to our attention just the ability or the need to move quickly and to change quickly for all of our participants. Thank you for pivoting. I'm going to do something. I'm going to invite our participants, if I can get to that. I'm going to invite our participants to go to your chat and just leave a word of thank you. Usually at the end of a presentation, we'd let people applaud. We can't hear you, so I've opened the chat so that Paul and Pierre can read your thank you messages. If you want to put a thank you message in our chat, and Paul and Pierre can read that, because this is a lot of work for them, and we are very appreciative of their time and their expertise. Our annual conference is blessed to have both of them on our staff.
Bill, Pierre and I get stronger as we keep talking with good, strong church leaders. So if we have any blind spots, let us know. And we really do like doing the consults. That's been something that we've cherished over the last year. And I think we'll probably continue that.
Wonderful. Well, that is all for this evening. I'm going to close this with a word of prayer and then send everyone on their way. So if you would pray with me, please. Holy and gracious God, we give you thanks for the variety of gifts that are in our annual conference, from clergy and laity who are able to comprehend such complicated and complex issues that deal with funding and finances. I give you thanks for these variety of gifts, but I also give you thanks that they come from the same Spirit, from your Holy Spirit, O God. We thank you for the blessing of this knowledge and for the willingness of Paul and Pierre to share it with so many and to give of their time. We ask for your blessing upon them and all of our participants tonight as we go our separate ways in Jesus' name. Amen.
Amen.
All right. Thank you all very much. Have a wonderful night.
Thank you, everyone. Thank you. Thank you, Pierre.